Hello and welcome. My name is Ray, and let's get into it. Alright, so I'd like to start off with just another position update. I am trying to look at uh, getting these videos uploaded in a weekly fashion, sort of looking at the end of the weekend, maybe um, Sunday or Saturday. Currently not looking at trying to do it on a Monday, but at the moment it currently is Monday just due to uh, other factors. And yeah, just I guess the idea is just to recap the week prior and just looking forward to just analyzing some things and going over some of my goals and where to go through from there. Um, but to have a look here, we've currently got my total position, total net worth, jumping past $100,000 again. You can see these were mainly done through shares and superannuation. You can see debt has started to decline a little bit more, but you can see the overall net worth has still increased by, I believe it is around about $3,000. Um, yes, the last video posted at 98.5 and sitting at 101.5 now, so that's $3,000 difference. So that's really good to see. Most notable things about the shares. Um, Actually, no. No, no, no. Going to start off with the super first. So super, there has just been a deposit from my work, uh, and that's just currently increased the overall position there, which is good to see. Just adding through to my balance, which is good to see. $860 up for the month. Um, there is a couple of things which I would like to talk about super, but I'm going to save that for a further video because I would like to talk a little bit more about the shares portfolio that I've got, or shares position. I'm jumping in between portfolio and position, just trying to figure out what I'd prefer to say or what is actually correct, but I'll get there eventually. So shares just sitting just shy of $68,000. A couple of things going on in this in the past week. Earnings season is still currently going on, and companies are giving us updates. They're announcing their dividends as well. How much money do they earn? How much profit do they make? Etc. Etc. But it also is a sort of dangerous period as well. So um, there's pros and cons with every earnings season. Upside when the company does well, and there's earning upgrades, you'll generally uh, see companies have their dividends increase or have their share price increase just due to the hype of the company. And there is also the downside as well, where there's earning downgrades and or dividend cuts as well. So there is the pros and cons there. I've got an example of an upside, which I have one of my stocks that I have, which is DDR. Currently, like using using this website to have a look at my company dividends. But just recently, uh, DDR has announced, get out of the way, a 13-cent dividend, where if you look at the history, their highest has been 7 cents. So almost double on their record. And actually, when this news came out, I saw it. It's like 13 cents. Holy crap! Like, what the hell? It doesn't make sense. And that was insane. Like, such a dividend increase. Well, when I read about it, was actually really really well received, because that's more money in my pocket. Yeah, awesome. I love money. It's great. And yeah, that was just generally well received. And I actually woke up on the morning and noticed that was going to be well received by everyone as well. Share price was trading a little bit lower than I generally expected. And actually, we'll just have a look at the share price for that over the past couple of days. So it's 665, and then that, which is a 7% increase. So me getting in the morning, I believe I got in around about $6.80, or that's um, when the market opened, or the company opened at that price, and it just basically went up from there. You can see the downside there, but that's after the ex-dividend date, so no one's entitled to that 13-cent dividend anymore as of today, as everyone's already got it. So yeah, that's one of the good things about earning seasons. Can show some hype, can show some excitement, but there's also the downside as well, which I've got one of my other stocks, which is G8 Education, or GEM. I actually got into this, I believe, 5 months ago, but actually, no, I can pinpoint exactly where. In July, so 6, 7, 8 months ago. And the reason I got in is I saw the general trading range and then big giant drop. But what I did was I caught what people generally say is they tried to catch a falling knife. So I bought in thinking it would jump up. It used to be, um, actually, well, it did. It does pay dividends, but it doesn't as frequently, and I'll explain that in a moment. But you can see the general downtrend, and then just about 3 months ago, this massive drop from about $2.59 down to $1.99. So 17, about 25% decrease in a week, basically. And I believe that was from either a profit downgrade or I forget the other name of that. No, I'm not going to get it. But generally negative outlook for the company, and its share price is reflecting it not only once but a couple of times, as you can see those sharp drops over and over and over. And yeah, it's generally about this time where I'm trying to think, do I want to hold on to this company? Do I actually think this company is going to do well in the future? Is this company going to come back? Do I actually like having this company? And this is actually not the only company which I've done this for. I've also previously held South 32, which, if you can see the last year share price, it's just been down and down and down and down and down. Just trying to have a look here. 33% down over a period of a year, which is not good. And yeah, after the share price has dropped a little bit, just started thinking about, do I want to hold on to this company? And in the past week, my evaluation was no. No, I don't want to hold on to these companies. They don't. Um, they don't make me, or they don't make me happy. I guess that's a pretty weird saying to say, but I don't enjoy them. Having them in my share portfolio. So I've decided to sell both of them, and the past week I have decided to jump into ones which are, I guess, a little bit more enjoyable, or I find some real value out of the companies which I bought, and one of them being JB Hi-Fi actually, and that one's pretty obvious why. I've got JB Hi-Fi, which is a company which sells what is it? Digital goods. Think of it as, say, like a Dick Smith, or wow, why can I not think of any other companies like JB Hi-Fi? But they sell tech things to the general public or consumer, and in the current previous 6 months from July to December, they've actually done really well. So um, for some reason, the average person is still buying goods from JB Hi-Fi, but overall, everyone's holding onto their money or being a little bit more smart about their money. So it's a little bit odd. Why does JB Hi-Fi stand out? And for myself, just thought it was a little bit more exciting. Just had a look at their share price over the past year or so. It's doing fine, but that's obviously not the only indicator why to purchase a company. There's so many more things, but I would rather have, say, JB Hi-Fi than G8 Education and South 32 at this point in time, even though I sold at a low and then bought JB Hi-Fi at a high. But the positions that I had were small compared to my other holdings. So should JB Hi-Fi JB Hi-Fi's share price drop a little bit, I would be able to add more of it through the money which I earn through working, and be able to pick up a bigger dividend. Because that's also the other thing. JB Hi-Fi had announced a 99-cent dividend, which was the biggest dividend they have ever announced. So decided to get in on that and just swapping out one of the companies which I wasn't happy for. The other company which I bought was actually Commonwealth Bank, and the thought process behind buying Commonwealth Bank is that it's the largest bank, and the largest bank in Australia, and compared to the other banks, NAB, ANZ, and Westpac, Commonwealth Bank seems to be holding up better than the others in this low interest rate environment. So as interest rates start to drop, it starts to hurt on uh, banking profits, as they're not get as people who are paying their mortgage don't have to pay as much should they refinance, etc. Um, but yeah, as Commonwealth Bank being the largest, you should see Commonwealth Bank still be around in, say, like 10, 20, 30 years or so, assuming they don't do anything ridiculous. Uh, but the biggest bank, and yeah, just keep that profit machine churning. But the position that I have in CBA is actually not that large, so just starting off small and just adding to the position every so often, based on news and current income. But yeah, they had also announced a $2 dividend, as far as I'm aware, and yeah, just wanted to get in on that and just adding to the position, and eventually I get to start building that up. But yeah, I managed to jump in there before the ex-dividend date and pick up the dividend. But that's basically the strategy that I'm currently doing for the share portfolio. And if we actually jump into the shares area of the document, just jumping into the graph first, we can actually see a jump in the dividends. 2019 shaping up to be, well, it currently is the biggest year that we've got. 1600 almost in the year. And if we go to the data page, which we have not been to before, you'll actually be able to see all of the dividends I have received and the companies which I have had. So having a look here, the first dividend that I actually received was in 2011, the May of 2011, and received $260, $111 of franking credits, totaling $371. But you can actually see other ones, so NRW, which is under the NWH symbol, and have basically just held those two for a period of like 8 years. But then I started to pick up investing myself. And it's from there where I started to get involved. So you've got things like DDR, which I mentioned earlier, FMG, RFF, ARF, AVN, and whole other things. Coles is in there. You can see South 32 and Gem in there, 5GN, National Storage, and then the latest JB Hi-Fi and Commonwealth Bank. And yeah, it's just good to see that that rather than say getting 2 dividends a year, these are all the dividends that are received in 2019, and these are the dividends which I've received in 2020. And yeah, it's just gonna increase from there, which is great. The thing that I'd like to turn your attention to would be the monthly total. So starting in May, uh, the dividends that I received was $402 of income, and I've actually received a dividend every single month for the past 11 months, which is insane to think about. because in Australia generally the common um, the common company pays out a biannual dividend or 2 times a year. Though if you have, say, a handful of 10 companies, you might not necessarily receive a dividend every single month. And it's it's just interesting to see. But I guess it's due to the core strategy that I've em employed, which would be able to achieve this type of thing. And note, it was not 100% intentional to have it every single month. Um, but I guess if I just go into it, um, I've got 4 quarterly dividend stocks, which is a little bit more rarer than the biannual. So uh, where is it? RFF, ARF, AVN, and DDR. So these 4 companies pay out quarterly. 3 of them are are REITs or real estate investment trusts, and then you've got DDR, which is a tech stock. When I was doing my research, I did notice a couple more companies which paid out quarterly, but they were LICs, I believe, or listed investment companies, which I generally don't like to invest in them. Just reasons because I like to have um, control in the stocks that I pick, which is just uh, I guess it's what I like to do. So LICs, ETFs, they some of them actually pay monthly dividends, but I just don't tend to like the way they work for this type of strategy, I guess. And yeah, just with the quarterly dividend stocks is the core that I have. So you can see the group paying out in late July, August, and you can see their totals there: 1958, 1762, 2633, and 5670. You can actually see DDR payout a little bit earlier at $19.40. But if we go down a little bit further, where is it? Where is it? Where is it? There we go. You've got RFF, AVN, ARF, and DDR again. But do note that I do have these set to reinvest the dividends back into the company, buying more stocks with the money that they have paid me. And the result of that will actually allow me to have more stocks in the company, which means the next time that they do pay out a dividend, I should get more than I should have if I didn't reinvest them. So if you can have a look at DDR 1940 to 5670, which is due to myself purchasing more shares. But if you go through to the next one, 5715 and 5755, this number has actually increased, but I have not purchased any shares with my own money. The money which I've gone to a job and worked for. So overall, that's the idea of the share stocks that I have. Reinvest the dividends, and then I'll get more later. But you can see my excitement when DDR announced their 13-cent dividend and going from 57.55 to $170. That was just the highlight there for that particular stock. But yeah, it's exciting. And the result of this, it's been 11 months, and if you look at the 12 month total or the past year, including income and franking credits, I've actually earned more than $3,000 or $3,300 in income and tax benefits combined, um, and almost $11,000 over my entire lifetime, which is insane. $11,000 for letting my money make me more money. Wow, yeah, cool. Let my money do the work, and that number's only going to get bigger, which is great. Um, Looking at the yearly total, so the 3374 here, um, just using that, I've worked out that this portfolio of shares earns $57.69 a week on average through income and tax benefits. Have to mention that. And that $57 is being put back into stocks or the share market every week on average. And that's how it's going to grow. That's how it's going to get larger. That's going to how it's going to go from $68,000 all the way to $100,000 and beyond, and it's just going to get out of my control um, of what I can earn at a job. But yeah, the idea of earning $57.69 per week on average, it actually puts myself in a position where I'm 5.7% on my way to making $1,000 a week without working, without going to a job, without having to do anything. But at the moment, I'm currently working right now, so it's on top of what I'm currently earning. And it just takes this, knowing I've got that going on in the background, just takes a lot of stress off, that eventually, after time, I won't have to work. And this is the ultimate method which I'm looking towards to do that. And cool, I do have some other things to end on, retire on. I've got super for if I age to, well, hit preservation age. I've got some money there, but I'm not adding to it eventually. Well, adding to it often just through the compulsory contributions. And then I've got my diversification through Spaceship, which is just there to get more exposure to the market and not be completely isolated in Australia. So I've got the plans there so far, currently over 100,000, which is great to see. So I guess the next big target would be to get past this 110 for total, 70,000 for stocks, and 40,000 for super. And yeah, I guess that I should wrap it up there. Hope everything was going going well, but yeah, I'm gonna finish it up there. Thank you for tuning in. I hope everything goes well. It's probably the third time said it, but until next time, thanks.